How's business going for you guys?
Business is slowly picking up. I mean, after a couple of tough years in investment banking, I think we're seeing market conditions improve month by month. We're seeing a lot more deal activity as every month goes by. You know, the rabbit hasn't jumped out of the hat quite yet, but every month gets better.
We were talking a little bit about how the fact that you're sick of talking about interest rates, but I have to ask you, how do you assess the broader sort of macro economy and how the RBA is navigating this last part of the cycle?
Look, I think you know, the conclusion of the debate at the moment is that Australia is just lagging the rest of the world by 3 to 6 months, call it. Our central forecast is for rate cuts in the US this year, yet our house view is for cuts next year, starting in the first quarter in Australia.
How does that play into your view as to deal volumes and interest?
Look, I think it's now pretty well widely accepted by the market that that is the rate cut cycle that we'll be on. So we've noticed our M&A pipeline and our equity capital markets pipeline building over the last few months in anticipation of rate cuts.
Guzman and Gomez is one of the ones that you're co-managing. Do you think Australia's ready for the IPO window to reopen?
Yes, I do. The wall of money that's sitting on the sideline, Heidi, is unbelievable. Not only listed investors, but also private equity. And I think well-structured, correctly priced IPOs will happen. And I think Guzman will kick that off.
Do you think there's implications for capital markets if we go from already being in a per capita recession to a broader recession in this economy?
Look, I'm not forecasting a broader recession in the economy,
right.
Heidi. You look at the fiscal position of the government, it's very strong. Australia's actually, let's coin the phrase again, a lucky country. The resources revenue that we've been enjoying has meant we've been in budget surplus, the government's been spending lots of money, and we haven't got unemployment. It's slowly coming in, but not in a material way.
We've seen attempts and certainly a lot more activity when it comes to the resources sector for deals. Is that an area that you're watching closely? Are there sort of specific sectors that you think will see more activity?
Look, I think on the M&A side, I would watch sectors that financial sponsors and private equity like. For example, healthcare, some of the consumer goods, because the weight of money that private equity have right now, waiting to invest and will be invested over the coming 12 months, I think it's going to be prolific. And private equity do like healthcare and consumer product, and I think we'll see activity there.
What's also been quite interesting is that shareholder activism has been making a return, even in Australia. Is that a trend that you're picking up on? Are there is there a sense that boards and companies are more aware now?
Definitely, it's a big topic at the boardroom. And look, what I'd also say is rather than activist investors, which we've seen a lot in the US, we're seeing very active long-only investors who are more vocal with their views around what they want to see from companies and boards. And I think that the temperature has been turned up and the pressure is on those companies that are underperforming, and that's been well reported in the press, and I think that'll continue. Which
companies are you watching in particular?
Well, look, I'd rather not get too specific in terms of the activism on companies. Look, we've been heavily involved in the Lend-Lease situation, and that has led to significant change, which I think is good for the company.
You know, last year when we were sitting here, the theme for the summit was beyond disruption. Do you think Australia's made good on being sort of a little bit more opportunistic about themes like AI?
Look, I think, Heidi, the AI theme is really yet to play out. It's interesting, in a few of the offshore conferences and other things, people have been asking the question as to whether there's an AI bubble. And I think the reality is that there will be winners and losers out of the AI debate. There's a lot of money being pointed towards AI right now. People are trying to work out who the winners and losers are, and without a doubt there'll be some big winners. There already probably are a few big winners that we know well. And then there'll be some losers, and people will lose money on AI because with any disruptive technology, bets are placed early without knowing the outcomes. And look, I think just listening to Cliff from Canva on stage and the amount of work that they're doing, embracing AI and embedding it in their product is a great example of Australian companies capturing what's going on in the world and making the most of it for their products.
Is there a sense that there could be more for Australia?
In terms of AI?
In terms of, I guess, capitalising more on tech deals.
Yes, look, Australia's always been a great incubator of tech companies. A number of our unicorns are now well and truly on the global stage, like the Canvas and the Safety Cultures and Rocked. And I think that will continue because we're a very innovative nation, and the number of unicorns coming out of Australia will continue over the coming years. And I think that we follow them very closely because most of them end up listing in the US, certainly the big ones, and they're very successful Australian-grown companies.
You talked about the wall of money. Do you think Australia is still attractive for investors outside?
I think it's very attractive, and I would say that given the volatility in China, most of the global money that's been pointed at Asia Pacific has been reweighted away from China, and the beneficiaries of that have been Australia, Japan and India. And a lot of money has flowed both through global funds and global private equity firms. Australia is a very safe place to do business. It's very, very hard to lose money in Australia. And therefore, that safe haven has been an attraction of capital, particularly in the last 12 months as we've seen such extended volatility in China.
You talk about China, which is, to my next point, the Chinese Premier is set to visit. He's looking at a number of sort of different aspects to his trip, including potentially a site of lithium in WA. Do you think these sort of cross-border deals are getting harder, though, particularly when it comes to strategically sensitive areas?
Well, I think that's a good question for the Treasurer, who's following in the interview schedule today for you. I do think Australia is going to be very cautious on its precious metals as it relates to FIRB. And I think the government's already made that pretty clear, that their antenna's up in terms of the level of foreign ownership that they'd like to see in precious metals.
You just spoke a little bit about the deal flow when it comes to the US. Do you think the outcome of the election will change that? Is there a chance for markets like Australia to capitalise on that?
Look, I think what we're seeing now is people have been putting off doing deals because of interest rates and waiting for the cut cycle. And now in the US, people are delaying deals because of the election. And so, quite frankly, once we have a resolution on the election, I do think we'll see increased deal flow following the election, irrespective of the outcome. Just simply having the certainty around interest rates and the certainty around the election, I think, will be important for markets.